Hi, I'm Jeff Hirsch. I'm here at the Traders Expo in Las Vegas with Joshua Belanger. Did I get that right this time?
Yes,
I did. We're here in November of 2019, and you just gave a talk on 3 options trading strategies. What's the rest of the title? To make a million.
To make $1 million. First million, yeah.
And you were starting to talk about this buying calls and rolling them over on the S&P. Can you describe that strategy?
Yeah, so we're just trying to put framework together. So on the SPY, which is the S&P 500, simple,
yep.
And we don't have to get too far off about stocks and which ones to pick. You buy the call, 30 days to expiration,
okay.
And when it's open, and these are trading days, when it's open 20 trading days, you roll that
into the next option.
So you would close that out and buy the next one 30 days out. So you just roll.
So here we are. It's options expiration week next week in November, right?
Yep.
So you would be already owning the December call right now.
30 days to expiration, yeah.
Okay, so it's not quite 30 days yet to expiration.
Yeah, well, they have weeklies on it. So we would look at the one that's closest to 30 days.
So you pick one 30 days, and then when it gets within 20 days, so you hold it for 10 trading days?
Hold it for 20 trading days.
Hold it for 20 trading days.
30 days to expiration, roll after 20 days open, and then continuously do that.
So 20 trading days is 4 full weeks, right?
Mm-hmm.
Okay, and then what does that do for you?
That would return, just on that, was a 1,250% return. You would take profits at 50% as well.
Okay.
And that would create a higher probability of outcome. So I think we're at...
if you either take profits at 50, or if you don't hit 50%, then you roll it.
Yeah.
And how far out are you placing these strike prices on these options from?
It's a 50 delta. It's at the money. So 50 delta is at the money.
At the money.
Yeah.
You're buying an at the money call, hold it for 20 trading days,
yep.
Roll it, or sell it at 50% gain prior to that.
Over the last 2 years, and that's using the market drift.
2 years you did how much? How much?
1,250%. And that is using the market drift because of how money flows into the marketplace. The bias in the marketplace is that it's going to go higher. So you get that natural drift.
Sounds too good to be true.
Well, it's just you
have you back tested any further?
The point is to markets and money change, and you have to be willing to adapt. I compared it to a popular strategy of selling a put.
Right.
And it's not just about doing one. It's like diversification. It's like Buffett says. You can't just rely on one strategy.
So this is one of the things that you're doing. And then what are some of the other types? So you got this, what do you call this? This trading strategy?
This is just a simple one. I just call it's just a call roll forward.
A call roll.
Yeah.
S&P 500 call roll.
Yeah.
What's the other two?
You don't have to get too crazy about it.
No, it's simple.
It's simple. Yeah.
The call roll. I like it.
Well, we don't have to get broken wing butterflies or...
It's 2 syllables.
Yeah.
Call roll.
Call roll.
I might stumble on it. What are the other 2 that you talked about today?
The other one was the selling a put.
Okay.
And volatility. Options are volatility products, so it's just you have to create a framework. And what happens to a lot of the traders and investors is that they don't know the numbers.
Right.
And when they have drawdowns or things don't go their way, they get confused and they don't know how to continue forward.
They don't get out.
They don't get out, and they get spun around and lost.
So the call roll for the S&P, selling a put, which is basically instead of buying a stock, it's an old famous code. I'd rather sell a put than buy a stock, right?
Yeah.
Old school stuff. And what's the third one?
The third one, it's a little bit more speculative, but what we're talking about is hot money, and that's just following hot option activity that's short term, and usually they're playing for a bet that's going to beat the market.
So you're following a stock that's got a lot of options activity to it, and you're just following the money.
Yeah, so recently we just had Sonos that we had, and then we had Fitbit. And Fitbit was an interesting one because they were buying one strike and then selling the upside. So actually on Twitter, I posted this before the news came out that this takeover is going to happen. This is the 4th time on Twitter that I've done this ahead of the news.
Very cool.
That the deal was going to get, the ceiling on the deal is going to be 7 if anything happened. So exactly what happened.
Good stuff.
I appreciate it.
Thank you, Joshua. Thanks, everybody.